Alright guys, so I hope you're doing fine as always. In today's video, we'll have a follow-up of last week's video, but in this video we will have a look at money management and how to command your money. Now, here's the truth about trading that almost nobody talks about. Most traders don't blow up their accounts because of the market. They blow up their accounts because their money has no structure. You can have discipline, a strategy, a great mindset, but if your money is chaotic, your results will become chaotic as well. Today, I'm going to show you how to command your money to get more structure. Because when your finances are structured, your emotions become stable, and in trading, emotional stability is your edge. Now let's be real for a moment. Most traders lose money not because their entries are bad, but because they treat their capital like it's unlimited. We're talking about oversized positions, revenge trading, trying to trade back losses, random position sizing, funding the account out of panic or adding to a trade out of panic, and just in general, no plan, no reserves, no structure. Money without a plan becomes emotional money, and emotional money always disappears. I advise you to think of your money like a tree. Every part works together, and if one part is unhealthy, everything weakens. There are four main components, starting with the roots. These are your reserves. This is your stability. This keeps you calm during drawdown. Then we have the trunk. This is your long-term capital. This is slow, steady, consistent growth. No emotions, just structure. Then there are the branches. These are the short-term opportunities. This is your trading account, but of course with controlled risk. And then there are the leaves. This is your lifestyle, what you spend after everything else is stable. If the roots are weak, or the trunk is ignored, or the branches carry too much weight, the entire system will collapse. You cannot command your money if you don't know where it lives. So your first job is to build a simple map of your financial world. Write down your cash, your trading accounts, your investments, your different income streams, your debts if you have any, and your different spending categories. This is your dashboard. Before you open the chart, you must know exactly what your money is doing. Here's a big hack for emotional control in trading. Track your money flow for 1 or more months. This includes every inflow, every outflow, and how each purchase makes you feel. Do you regret the purchase after? Was it impulsive? Did you really need it? Are you disappointed after? Are you happy? Etc. Did you buy something because you were bored, were looking on social media for too long, etc.? By doing this, you will be able to identify financial leaks and spot emotional triggers. We do this because if your finances are leaking, you will feel pressure. And pressure leads to emotional trades. When you track your cash flow, you'll see exactly where your money goes and where your emotions take over. Now, every dollar you move has an emotional energy behind it. And when you understand this, your trading becomes a lot clearer. We make a division in 3 different types of energies. So first of all, the growth energy. This is spending that makes your life or skill better. These can be books, tools for learning, health and fitness, and just in general personal development. We also have support energy. This spending are the life essentials, like your bills, your rent, your food, just basically the essentials that keeps you functioning. And then we have the drain energy. These are the needless spending, the purchases that come from boredom, stress, impulse, or insecurity. Of course, you also have to live, so don't just cut it all off. Of course, you can spend money on fun things, just keep it controlled and make sure that this does not overtake the majority of your spending. Your goal isn't to be perfect. Your goal should be to reduce the drain, increase the growth, and balance the support. When your money energy shifts, your mindset shifts as well. Every professional trader has one thing in common. They are never desperate. And the reason they're not desperate is they have reserves. So start small. For example, try and build up 1 month of expenses. Then build consistently to eventually aim high. Most beginning traders start by aiming high and will overposition themselves in the market. For example, try and build up a capital of 1 month of expenses, then go to 3, then to 6, and so on. But do it step by step and start small. When you have reserves, you don't chase trades. You don't panic sell. You know what you can lose. You know you can lose a trade. You don't try and fix your life in one single trade. Reserves create calmness, and calmness creates consistency. Most traders think their emotions are the problem, but often their position size is the real problem. If your risk is too big, your brain triggers a fight or flight mode, you tense up, you panic, and you start breaking your own rules. So use the golden rule. Only risk 0.5 to 2% of your account per trade with no exceptions. For me personally, I even keep it lower and I keep my risk uniform for every single trade. I risk the same dollar amount every single trade. And only once I get comfortable with the numbers and the account grows, I up these numbers of risk. Just remember, a small risk equals a calm mind. A calm mind equals a better execution, and a better execution equals consistent results. Trading, of course, is short term, wealth is long term. A great way to build long term stability is to set a system, a weekly or monthly deposit like a DCA, dollar cost average, into something safe and steady. This could be index funds, ETFs, blue chip stocks, blue chip cryptos, etc., whatever you like. The point isn't the asset, the point is the discipline. Invest constantly with discipline. When you automate your growth, you build wealth slowly, consistently, and calmly. You're no longer depending on trading to save you. This is the way to create long term financial stability. It's important to create your personal money rules. These are your financial commandments. your personal constitution, your guardrails. Examples: set emotional boundaries. For example, I never trade to make back losses. Have a mathematical discipline. Size your position with math, not emotion. Have capital protection. The capital protection, or your own capital protection, must come before profits. Secure what you have before you look to get more. And emotional control. Don't add more money to your account or to your trade out of fear of losing. Just take the loss and move on. Everyone loses, it's okay. When you have these rules written down and you stick to it, you stop making emotional decisions and instead start making structural decisions. So to summarize, commanding your money is not about being rich, it's about creating structure, a system that supports your emotions, your trades, and your long-term goals. When you command your money, your mind becomes stronger. Your emotions become quieter and your trading becomes cleaner. Remember, always treat your money with respect. Appreciate what you have, don't just throw it away in the market. If you manage to become the boss of your own emotions, like we discussed in last week's video, and you combine that with becoming the boss of your own money, you did take some huge steps toward consistent profitability. In next week's video, we will discuss the topic of managing your time. And these 3 points are your 3 pillars to form the solid basis of consistent trading and consistent profitability in this market. So that was everything for this video. As always, if there are any more questions, feel free to ask it in the comment section or on the Discord server, and I will catch you guys in the next one. Take care, see ya, bye bye.